Good morning, Market Chameleons, everyone joining us for the first time. Thank you. Before we get started, let's take a look at the shared disclaimer. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars, is for informational purposes only concerning Market Chameleon tools and products. With that, Dee, good morning.
How are you?
Good.
Good morning, everyone. I'm going to share my screen here. And what we'll discuss today is the different trading sessions that a stock trades in, throughout the day. A lot of times we look at a stock's volume and think about regular trading hours, but there are other things going on besides the regular trading hours. And we're going to discuss, some of the distinctions and what type of insights we could get based on that trading session, price action, and volume profile. So let me first go to a stock symbol and bring up an example. Let's take Google as our example. I'm going to go to Google, and over here, on the left-hand side, there's a menu. And under the stock info, we're going to hit price action. And we come to this summary table with these different market sessions. So today, we haven't opened up yet. So far, we only have the pre-market trading activity. I'm going to go back one day on this date. We'll go to Friday. I'm going to select that to bring up the previous day's trading session. So now we have data populated for all these different trading sessions. And here we could see we have the pre-market, the opening cross, regular trading hours, the closing cross, and after hours. And all these are somewhat different. We have different, let's say, trader cohorts, trader types that can trade in one session, but not on another session. And based on that, we could get different insights, what a typical or what a certain trader cohort may be doing differently than, the group as a whole. So let's take a look at first the pre-market. And in the pre-market, and here I have these two subsessions. So in the pre-market, we're looking at a trading session that starts before regular trading hours. I think they open up at 4 a.m. and you do get to see some volume, sometimes trading that early, but you'll usually see it pick up once the news cycle starts, where companies start issuing press releases, or you get certain economic indicators that are released. So I would say typically around 7 a.m. is where you see a pickup in the volume. And what the pre-market session does, and here we could see it graphically, is it allows trading activity in a pre-market, but it has a different set of rules that you don't have in the regular trading hours. So you don't have these rules and obligations that for market makers or specialists. You don't have the same Reg NMS rules, and you don't have the same trader types that can participate in a pre-market versus the regular trading hours. And that's important to understand. So, for example, in pre-market hours, some people may not even be able to trade because you have to get approved. So even though you have a brokerage account, it doesn't necessarily mean you're approved to trade in the pre-market hours. So even if you enter in an order for stock, that order may sit there until regular trading hours, and then it will be eligible for trading and execution. Also, there are certain institutions that cannot trade during pre-market or outside regular trading hours, and certain institutional order types that are not eligible to trade in a pre-market, such as like a VWAP order, because a VWAP order follows the VWAP price during regular trading hours. So when we look at the pre-market, what type of trading activity do we see? And usually it's the more aggressive, self-directed trader types that aren't necessarily like these passive traders. Also, options don't trade in a pre-market, for the most part. And I mean, we do have like a little bit, like I think SPX does, but in a typical stock, let's say Google, options aren't trading in the pre-market. So, when we see options trading in regular trading hours, some of those transactions can result in a hedge in the underlying. So sometimes we see trading activity in the stock, but that's because there is an options trade that is being hedged. But that, since we don't have options trading in a pre-market, we don't have that type of a scenario. So when we look at the pre-market, we're kind of looking at a trader type that's usually reacting to something, and a more aggressive type of trader and trading, typically will be something in the news, right? So some in the news or anticipation of order flow, and they're trying to get ahead of it prior to the opening of the market. And here we have a couple things here to track. One is, the VWAP price, which is the volume weighted average price in a pre-market. And this lets us compare it to the closing price to see if the price action is it pushing the price higher or lower, right? So that's important. Are people repricing the stock at a higher or lower price than before? And we also keep track of the notional, the dollar value of all the trades. So you could have trading in the pre-market, but it could be very insignificant. So you might not put that much of a weighting on that trading, because what if you only had 100 shares trade the entire pre-market? Well, that's really not that meaningful. Could have been even an outlier trade that traded far away, 2, 3, 4, 5% away from the previous day's close. But that doesn't necessarily mean that the price of the stock is going to get repriced there, because it's not enough. It's not enough trading. It's not enough of liquidity to suggest that the price of the stock has repriced. So we want to keep track of the VWAP price and the notional, the dollar amount of the trades. Here we got $98 million worth of Google traded in the pre-market on February 28th. So that's a pretty significant amount. And on top of that, we want to keep track, well, is that more or less than typical? So to do that, we have to keep track, what does Google tend to trade in the pre-market, right? So that's what this relative notional is over here. The relative part lets us know, is this more or less than typical pre-market trading activity in Google? So you could see here that on Friday, Google traded 1.2 times its average notional amount in pre-market, which is a little bit more than usual. In addition to the total pre-market activity, we also want to see leading up to it, like up to the open, to the next session, what happens? Does the stock get driven up a little bit, lower a little bit, because you will see a pickup right into the opening session, which is in anticipation of where the market may open. So this is looking at 2 minutes before the open and 1 minute before the open. Okay, so we could see here that right up to the open, right, it kind of ticked down. Now, before I go to the opening session, in addition to this, we're looking at a 30-day period versus the previous 30 days. So this is comparing month to month, just to see if there's a pickup in any trading session that's noticeable. So here we see that if we compare the most recent 30 days versus the previous 30 days, pre-market activity has actually jumped up 25%. Right, so this is just another metric to keep track of. Is overall trading dollars picking up in Google or going down? Right, is interest in trading activity going up or down if we compare it on a month-to-month basis? And this is also keeping track by session. Okay, so for sure, pre-market trading in the last 30 days is up 25%. Now we go to the opening cross, right? So that's the pre-market session. So keep in mind that this is looking at a certain trader type who's allowed to trade in a pre-market, reacting usually to something that they're seeing that they're repricing. The opening cross over here, that's a single price auction trade. It's different than continuous trading. So in pre-market, you have bids and you have offers and you have continuous trading going on. The opening cross is a session that a specialist will take his order book and say, okay, I got all these buy and sell orders, right, that have accumulated that want an execution, that were not eligible in pre-market trading. And let's say I have an imbalance, right? Imbalance to buy or imbalance to sell. So I have to come up with a price where I can match up the most at a new fair value. Okay. And sometimes the specialist will be adding liquidity at a certain price. So usually if the stock is down, let's say, the specialist is probably adding liquidity on the buy side. If the stock is up, unless everything matches up, the specialist will add liquidity to the sell side. And that's the opening cross. So those are all the cumulative orders placed on the order book that the specialist is handling and opens it up at a single price. Okay, so even if you have let's say you have an order to buy, here's the opening price, 170.30. So even if you had an order to say buy Google for $171, at the open, well, the specialist opens it up at 170.30, so that you would get that price, 170.30, because you would have been on that print. Okay, so the opening price also allows us to see the interest and activity that accumulated, for that opening price. So these are just orders, that are accumulated before the market opened. And we could then see, well, what was that opening cross? Was the volume really high, indicating a lot of interest in the open? And what was the price impact? Because if the price impact was that the stock was much higher, then there's way more demand than supply, or much lower, there's way more demand to sell than to buy. So here we see that the opening cross, $98 million worth of stock um, transacted, and that was 1.3 times its average daily volume. If we wanted just to compare the month to month, we see that's up 5%. So activity so far in the pre-market and at the open has been increasing. So there's more interest. It's basically indicating there's more interest, trading interest in Google, right? The dollar value, dollar transactions in Google have increased month over month in the pre-market and at the opening cross so far. And here we could kind of just track. So this is the previous day's close. This is the pre-market activity, and this is the opening cross. So you could see from the previous day's close to the open, the stock ticked up a little bit. I'm sorry, from the previous day's close to pre-market activity, the stock ticked up a little bit. The bar lets us see the high and low range of the stock in pre-market. And that dot tells us the VWAP price in a pre-market. Okay. So the other thing that this graph shows before I keep going is that the opening price, you could see, ticked down a little bit from the pre-market activity and pretty close to the closing price. So that's so far looking at all the activity right up to the open. And then once you have the opening cross, then we go into regular trading hours. That's when the specialists and market makers are providing liquidity. The order book is available to trade. And we have continuous trading going on, and all the rules of regular trading hours are in effect. You got Reg NMS rules, and all that goes into effect. VWAP orders, all types of trading options typically also open up after the regular trading hours in the stock come into effect. So then you have options open up, and then options, if they're trading, that could trigger also hedging activity in the underlying stock. All right, so all that then starts up, and that's where you see the most volume. Okay, that's the regular trading hours. That's when we go right into the regular trading hours. Again, we look at the, keeping track of the VWAP price, the dollar value, and its relative volume compared to the daily average. So we could see here in Google, if we compare month over month, even regular trading hours were up 7%. So the dollar value, dollar interest in trading has ticked up in Google month over month, right? Which could, if we keep track of what's Google been doing, it could just mean that there's, more money flowing into it, right? It could also indicate that there's more money in general flowing into Google. I'm going to go here, just show you guys a couple more breakdowns. And we could break down the regular trading session by time of day. And we do that also because the volume profile of a stock and the market overall, it's not always just, consistent or constant like throughout the trading day. What you usually see is that the first hour is busier, more volume than, like, let's say the second hour, third hour of trading. Once we, past the first hour, things kind of slowed down because, you have then people reprice things quicker, right? Get their trades in quicker. And then you do have continuous trading, but things in the afternoon or noontime, the volume slows down, and then it picks up the last hour. So we could break that down and see how that's looking. How does the stock look in its first hour of trading, versus midday, last hour of trading. And we could even look at the last 2 minutes of trading, which also are kind of important. But I'll explain why. But when and the other thing, when we talked about like the pre-market, you usually don't see like passive. Remember, we discussed you don't see passive trading. So a typical retail trader who's just buying, like, say, Google for portfolio, right? Like, oh, I'm just going to decide to buy 100, I open an account and buy 100 Google. They're not doing it in the pre-market hours because you'd have to go, get approved for it and specifically put in order type that's pre-market. So a lot of passive trading is also going on in the regular trading hours. The more active trades, are in the pre-market. So the first hour can also show us, well, how well, did the opening cross, where, let's say the opening cross is a new fair value, where did the stock go after that? Did it drop? Did it go up further? Did it stay, close to where it is? So we want to look at that because it could indicate certain things. Like sometimes what we may see is that a stock opens at much higher, right? Let's say it opens, 175 or whatever, but at the open on very high volume. And then all of a sudden we see it dropping, right? So couldn't hold on to those gains. High volume, large gains, and all of a sudden it doesn't hold on, and we just start seeing it drop. That could maybe indicate something happened at the open, which is worth taking a look at. Like a capitulation or covering. Somebody had to cover their short, or they were forced. Sometimes shorts are forced to buy the stock because of reg show rules, right? So if you're short a stock, well, you have to borrow it from someone. You can't just short a stock and not borrow it. It's called a locate. Well, if you don't have a locate, well, who did you borrow it from? Or even if you had one originally and you no longer have it, well, you might be forced to cover your short. You got to buy back. And that situation could play out, capitulation, overreaction to some news. So we look for those types of things. Well, how is the stock doing, after the opening, if there's a big move on high volume? What's the follow through? So that's why we're looking for clues in the first hour of trading. And sometimes it opens higher and it keeps going, which means it took out all the liquidity and there's more demand behind it. So that could happen as well. They call it gapping up, right? Gap up, take all the stock and took out all the resistance, liquidity, and keep going. So that's what we're looking for the first hour. What happens after that opening cross? So that's in the first hour of trading. Okay, and we also keep track of the amount of dollar value trading versus typical. Now, midday, that's where things may slow down. You have VWAP orders in there, that are just following the VWAP, and at certain trigger points, it'll start executing the VWAP order types. It could be a time VWAP, price VWAP, whatever it is. Those are in there. Passive orders are in there. You have options traders hedging. You have passive order types coming in there. So you may have news events midday too. Like sometimes the Fed announcements like at 2:00. So those things could be also happening midday. It's important to keep track of and attention. Then the last hour in the trading session, we also see a pickup in that 1 hour. So midday these are the hours that we count between 10:30 and 3 o'clock. So those are all the midday. The last hour, 3 to 4, you will start seeing also pick up in volume. And that's because, if you're want to rebalance your position, establish a new position, whatever you need to do, there you have that last hour of trading to access, and you also allowed almost a full days of trading for the stock to kind of reach a fair value, new fair value. So that last hour is also important. What happens in that last hour? Because then you start seeing a pickup in trading volume, and that's an important hour to track. Last 2 minutes we track, and this is also important because what you will see usually in the last 2 minutes of trading is a lot of rebalancing and rehedging. So, like for example, I'll give you many strategies, like for like an option strategy or option portfolio. When the stock moves, you have new deltas, you have a new directional risk. Could have been trading throughout the day, and you have these residual deltas. If you want to go out flat, if you want to be delta neutral, you're doing it. You have, you'll see a little pickup there in the last 2 minutes. Some strategies are day trading strategies. You have like pairs trades. That sometimes a pairs trade either will get liquidated, reset at the end of the day, so you need to rehedge it to the new delta hedge, because even a pairs strategy or dispersion strategy, once things start moving, it requires a rehedging, a rebalancing, and you're doing that close to the end of day. So even in the last 2 minutes, you'll start seeing volume in those 2 minutes pick up, at a much larger trading at a larger volume than other minutes before that. And well, I'm going to stop right there because we're right up at 9:30, but we could continue this discussion, going through all the different trading sessions and what type of insights we could get.
Yeah, that was great, Dee. Very helpful webinar for the Chameleon community. And everyone says thank you. Everyone have a great trading day. Stay safe out there. Remember to like us and follow us on YouTube, Twitter, everywhere else. Great job, Dee, as always.
Thanks, everyone. Stay safe out there. Have a great trading day, and we hope to see you tomorrow.
Trade in peace, Chameleons. Have a great day. Thanks, Dee.